Good afternoon. I'm Doug Loud, standing in for David Mandy and speaking for O&M Partners today. And I want to welcome everyone to the Arizona Metals Corporation Town Hall webinar. For those of you who are new to these broadcasts, you should know that O&M acts as a link between the investing public and public companies. In past times, these groups sort of pass each other like ships in the night. But O&M has developed a digital roadmap that enables us to keep pace with the tremendous changes in investor demographics and how those people receive their information so we can assist our clients. Now, we want this broadcast to answer all of your questions. Questions will be easily answered by going to the question panel of the GoToWebinar screen or by emailing us. For any questions that remain unanswered at the end of the call, we'll follow up with you in a timely manner. Now then, for those of you who've dialed in only by phone, the only way you can hear the pre-recorded introductory presentation is on your computer speakers. If that's not possible, you'll be able to hear the main presentation after about 10 minutes, so please stay tuned. First, though, today, we're going to hear from Robert Pais, who is the editor and publisher of GoldSilverPros.com. GoldSilverPros.com's premier subscriber digest emphasizes long-term cycle investing in the precious metals markets. Robert is also the author of the 2010 book, Drop Shadow: The Truth About the Economy. Now here's Robert.
Hi everyone, this is Robert Keynes from GoldSilverPros.com. Today I'm going to talk about the relationship between real interest rates and gold and why gold may be your best opportunity to save long term. So we'll go ahead and get into the charts here. We have this interesting chart from the visualcapitalist.com depicting the 700-year fall of interest rates. Now it's interesting to note that since 1310 to about the current time frame, 2018, there has been this trend line down, smooth sloping trend line down over those 700 years of lower interest rates. This is not a phenomenon that's occurred only in the US in the last 40 years or so. It's basically a 700-year trend. And the interesting thing to ponder is, why would we have lower interest rates over a 700-year trend? Could it be the rise of different types of technology, the Industrial Revolution, now the computer revolution, which has allowed us to get more output with less input? Is that we have more people on Earth and more overall labor? There could be a lot of reasons for that. The article goes on to hypothesize what could be three theories, and they're current theories. So these are just going to point to the last 40 to 50 years across the world and in the US. The first one is productivity growth. Since 1970, productivity growth has slowed as a nation's productive capacity is determined by a number of factors, including labor force participation and economic output. If total economic output shrinks, real interest rates will decline too, the theory suggests. Lower productivity growth leads to lower wage growth expectations. Again, that's just within the last 40 to 50 years. A second theory posited for the last 40, 50 years is demographics. They impact interest rates on a number of levels. The aging population paired with declining fertility levels results in higher savings rates, longer life expectancies, and lower labor force participation rates. So that could be a second reason. A third reason is economic growth. Dampened economic growth can have a negative impact on future earnings, pushing down the real interest rate in the process. Since 1961, GDP growth among OECD countries has dropped from 4.3% to 3%. And Larry Summers referred to the sloping trend since the 1970s as secular stagnation. During an IMF conference in 2013, secular stagnation occurs when the economy is faced with persistently lagging economic health. And one possible way to address the declining interest rate conundrum, Summers has suggested, is through expansionary government spending. They also noted that bond yields were declining during the same time period. That makes sense because interest rates and bonds are closely tied. You can see that since the 1300, global bond yields fell from around 14% to 2%. So very, very close to what we saw in overall interest rates, although interest rates started at 15 and went to closer to zero, just over zero. Bonds went 14 to 2, suggesting that the banks still want a little bit of rate of return on their money, but they do have to follow the overall trends in interest rates over time. That graph illustrates how real interest rates and bonds appears to slope across a similar trend line. And we'll get to what real interest rates here in a moment. While it may seem remarkable that interest rates keep falling, this phenomenon shows that a broader trend may be occurring across centuries, asset classes, and fiscal regimes. So these reasons that they gave in the article for the last 40, 15 years since 1970 really don't explain the overall 700-year fall, but we do know that fall is occurring. So if you're going to invest in fixed income, you can expect over time to receive less and less for your money. And when we get to the discussion of real interest rates, we'll see that that is often negative, meaning you actually get less out of it than you put into it for your perceived safety. So what are real interest rates? We have a nice chart here from long-term trends depicting the real interest rate. And real interest rate is basically this black line, nominal interest rate, minus the red line, the inflation rate, equals your real interest rate. So in other words, if the interest rate were 2% and the CPI were 2.1%, CPI being the consumer price indicator, the official measure of inflation in the United States, then your real interest rate would be negative 0.1%, meaning you would lose 0.1% of your money over time when considering the inflation rate in prices. And if you believe, as I do, that the inflation in some sectors of the economy, including energy, food, college expenses, healthcare, and others, is higher than the CPI, which it is, then you're really losing ground when you're investing in fixed income. So fixed income investments over time really don't help you preserve your wealth. If anything, they help you lose it, because we've had a 700-year decline in the rate in which interest rates are falling, and the bond yields as well. And when you consider the price of inflation, we're often in the negative territory. So basically, since the tech crisis in 2000, we've had almost the entire time a negative real interest rate. So if you had invested since 2000 over the last 20 years in most types of bonds, you lost money when considering inflation. There's a nice chart here, a nice paper here called The Golden Dilemma, published at Duke University, which talks about the relationship between real interest rates and gold. So let's say you're investing in bonds and it's not really giving you the returns that you want when considering real interest rates minus the rate of inflation. Well, would gold stand up well to declining interest rates? There's a chart in here on page 21 that I wanted to go over with you that I think explains the relationship extremely well. They basically charted the real price of gold against the real yield, 10-year Treasury inflation protected securities. And there is a correlation of about 0.87 to this chart, meaning that the real price of gold will rise as the real interest rate falls. So as you can see, the real interest rate is plotted here on the x-axis, and as it goes above 3-4%, the price of gold comes down on an index scale to a 2. And then it kind of clusters around there. As the real interest rate falls into negative territory, or towards zero into negative territory, the price of real gold rises. And there's such a strong correlation, you basically can draw a line here, just like you can draw on this other chart when we're talking about real interest rates. The declining trend of real interest rates means you're going to get less for your fixed income securities, your bonds, your sovereign and corporate bonds. But if you invested in gold, and as these interest rates had fallen, you would actually have made money on the gold trade. So this basically proves that over the 700-year history of declining interest rates, gold was basically one of your best investments that you can make. It was not fixed income. So then the question becomes, well, if fixed income is not the safe haven, what about the stock market? Well, I'm cherry picking some data here because I'm just going to graph it since 2000. But since 2000, you can see gold, as depicted by this line, has beaten all of the major stock market indexes, including the Dow Jones Industrial, the S&P 500, the NASDAQ, and the Wilshire. And it's really interesting to note that it's past the Wilshire, which is depicted by this yellow line here, because the Wilshire includes reinvested dividends. A lot of people advocate buying the biggest companies and taking that dividend because you get a return on your money. Plus you get the share price appreciation when you sell. Hopefully that's appreciated when you sell. But even the Wilshire takes 5,000 of those, puts them together, reinvests the dividends back into the stock, and it still is not anywhere near the increase in the gold price. Gold since 2000 has beaten the stock market indices by about 3.5 to 1. So not only are bonds long-term not a safe haven for your money, where they're going to save your money against the real interest rate, against inflation essentially, but also the stock market since 2000 hasn't either. And over time, gold has actually returned more than the overall stock market, because when you dollar cost average in your losses and your gains, the stock market doesn't return as much as simply holding gold. Well, why is that the case? I believe that's the case because gold holds its value over time against inflation. The best hedge against inflation is gold. And as the increase in monetary supply, as monetary supply increases and interest rates continue to fall, gold has taken the opposite of that to the point of having a very high correlation. Gold price rises as interest rates fall. And now, currently, at this time period, I believe as of July of 2020, it was reported across the world that we also have $15 trillion of negative interest rate debt, meaning you actually have to pay someone to buy that debt. So let's say I wanted to go to Europe and buy a type of Euro bond. I would pay a face amount for a $1,000 bond, say at $1,500. Over the time of that bond, they may pay me $400 back in interest, and then I can sell the bond for $1,000, redeem it. So you get $1,400 back. That's a loss. You put in $1,500 and you got $1,400 back. Not only is that a nominal loss, but when you consider real interest rates or the rate of inflation, this red line here, you actually lost more than that, because by the time you got the $1,400 back, maybe it was only worth $1,300. So instead of losing $100 on a $1,500 investment, you may have lost $200. However, if you had simply bought gold during that time frame, you would have seen a nice, healthy appreciation in the purchasing power of gold as an asset. I believe this is because gold is money. I also believe silver is a type of money, and that's why gold and silver are such great investments. And I believe over the long term, it's not the stock market or bonds that will help you save money. It will be in gold, and during times of declining real interest rates and during times of excessive debt printing like we've had across the world, including negative interest rate debt, gold is simply not only a safe haven, it's your best producing asset in real terms. So this has been the presentation today. Stay forward to your feature presentation. I know that you guys are going to enjoy that. And this has been Robert Keents with goldsilverpros.com.
Thank you, Robert. Now we're going to hear about Arizona Metals. Just so you know, we're going to be hearing from Marc Pais, who's the president and CEO and director. Marc is the founder and former president of Telegraph Gold, now Equinox Gold. He has 7 years of experience as a mining analyst with a focus on precious metals development companies. He's skilled in mergers and acquisitions, precious metals, and corporate finance. Marc has a Bachelor of Science in Geological Engineering and Mineral Exploration from Queen's University. We'll also be hearing from Paul Reid, who's the chairman of an MBA. Paul has 15 years of experience in financing mineral exploration, development, and production assets, and he is the founder and former chairman of Telegraph Gold, now Gold. Paul is an astute investment banking professional with extensive experience in raising capital, taking companies public, and in advisory services. I would also be remiss if I didn't point out that Arizona Metals is traded on the two exchanges, the TSXV under the symbol AMC, and the OTCQB under the symbol AZMCF. Now here are Marc and Paul.
Marc, you'll have to unmute yourself. Can you hear us, Marc? One second while we get Marc on the line. There we go.
Okay.
You're set, Marc. Sorry about that.
Hi, everybody. Can you see my screen okay now?
We can, yes.
Okay. So on the cover page here, you can see an image from a recent drone survey we completed at our K mine. This is overlooking our claims. It's about 1 hour north of Phoenix, and I'm gonna let Paul get started to make a quick intro to the company.
Sure, great. Thank you very much, Marc. Yeah, as you can see, we trade on the TSX Venture under the symbol AMC, and on over the counter QB AZMCF. Investment highlights. Marc and I started this company back in 2014. The goal was to acquire historic resources at what we would consider very cheap valuations. As those in the mining market know, it was a particularly brutal bear market, but that also provided some nice opportunities, and I think we took advantage of that. As a result, we acquired the Sugarloaf Peak project in 2014. That was our first acquisition from a project generator by the name of Riverside Resources. Fitting with the model, has a historic resource of 1.5 million ounces of gold at approximately 0.5 grams per ton, as defined by Westworld Resources in 1982. We have completed 4 holes at that project just recently. 2 were to approximately 200 meters to test the metallurgy, and also 2 holes were drilled deeper than 500 meters to test a large untested geophysical anomaly that we think could host a feeder zone. And those are all at the lab being assayed, and those results should be coming in the next month or so. Although we did get the first hole back, and as you can see, intersected 137 meters of 0.5 grams per ton, in line with the historic resource, again starting from surface. Our most recent acquisition and our main focus currently is the K-Mine volcanogenic massive sulfide project, located approximately 1 hour north of Phoenix. Again, fitting with the model, historic resource of 6 million tons, as defined by Exxon Minerals back in 1982. We've done approximately 20 holes, and we can talk about those results shortly. Marc will go through those, but we hit massive sulfide in I believe 18 of the 20 holes. So a very successful first phase, which was essentially to show what Exxon defined is there. So and we'll go into more detail on those results further in the presentation. Leadership team consists of principally Marc and myself. Founded the company, as I mentioned, in 2014. Marc and I met in the capital market business. I was working in investment banking. Marc as a research analyst. As the introduction mentioned, we started a company by the name of Telegraph Gold that went on to acquire the Castle Mountain mine, and that is being run by Ross Beatty as Equinox Gold. But again, we endeavored to start a new company in 2014, and that is now Arizona Metals. Colin Sutherland was one of the first directors to come on board. I believe he was the first. He has been involved in several public companies, but our interest with Colin was specific to his Capital Gold corporation that he ran that was acquired in 2010. It was an open pit heap leach project, El Chinate project out of Mexico. So he has some very good public experience, but also open pit heap leach experience that we think is very similar to our Sugarloaf project. Rick Vernon is someone I worked with when I first started in the capital market business. He has 30 years of investment banking experience. He's a geologist. He also introduced us to Dr. Mark Hannington, who is a world-renowned VMS specialist, and he's been very helpful in helping us, particularly at the K mine. With the we're looking at 2 very large geophysical targets to the west that he's helped us delineate our drill targets, and he's been very helpful. The capital structure, currently 64 million outstanding, approximately 8 million in the bank as of June 30th. That's gone down a little with the ongoing drilling at K and Sugarloaf. But as I mentioned, both of those programs have stopped now, and we'll be examining the data and looking for phase 2 programs. And they'll be being designed probably the next month or 2. We have some initial coverage, as you can see, by Agenta, Stifel, and Sprott. We don't have a target by any of those analysts, but they've been very good in keeping their accounts up to date on our exploration progress. The ownership, management, and insiders have a fairly large chunk of the company, as well as there's been some private investors that have been acquiring blocks over the course of the last year, and so the shareholdings are quite tight. And with that, I'll pass over to Marc, and he'll go over the two projects, the K Mine as well as Sugarloaf Peak. Thanks, Marc.
Thanks, Paul. So this image here is just an overview map of our K Mine project, located 1 hour directly north of Phoenix. This is in a prolific historic mining district. This was really the start of the mining industry in Arizona, with the discovery of numerous copper gold VMS deposits. There are about 60 past producing mines within a 1 hour radius of our K deposit. Those mines mostly shut down in the 70s, and while the geology is great, many of those historic deposits are now in national forest. Importantly, for our K project, it's one of the few that was left outside of those forest boundaries. So on the top right, you can see we're 10 kilometers from the Tonto Forest, and also about 10 kilometers from the Prescott National Forest. And that can be an issue for being in a national forest, can be an issue for exploration companies. It makes permitting more difficult, both for exploration, but also for production scenarios. So we don't have any of those issues. And prior to initiating our drilling, we also had archaeological studies done on our claims to show that there's no cultural artifacts, no burial grounds, no arrowheads, and also biological studies to show no endangered plants or animal species. We have at K 70 acres of private land, which hosts the historic resource, and another 1,300 acres of BLM, Bureau of Land Management, federal mining claims. Importantly, in this region here, which produced in over about 100-year history about 4 billion pounds of copper at an average grade of 3.5%, about half of that came from Phelps Dodge's United Verde mine, which is an hour north of us. That produced 30 million tons from the open pit. The average open pit grade was 5% copper, and the underground grade at the end of the mine life was 4 million tons at almost 10% copper with a gram of gold. So looking through the Exxon records, their issue in 1982, when they produced this internal proven and probable reserve estimate, was that they had 6 million tons at the prevailing metal prices at the time. The average grade was about 4% copper equivalent, which didn't look very good in comparison to the mine up the road, United Verde, which was producing 5% in the open pit and 10% underground. But obviously now, 40 years later, while this project has been dormant, metal prices have improved substantially, and at these grades now would be in the upper quartile of grades for undeveloped deposits. And this just gives you a sense of the metal breakdown of the historic resource: 5.8 million tons at 2.2% copper, 3% zinc, 55 grams silver, 2.8 grams gold. It's roughly 50% precious metals. Obviously, that doesn't take into account recoveries. There was some initial metallurgy done in 1951 and 1954. About 1,000 tons from the underground workings that was over 8% copper was directly shipped to the smelters in the vicinity, and they were returned at about 95% recoveries. And another 4,000 tons was sent for flotation, and that returned about 90% recoveries in the copper and 68 to 70% recoveries in the gold and silver. But obviously that was using the technology of 1951, and we think could expect significantly better metallurgical recoveries with today's technology. Slide 8 here gives you just a sense of the starting point we have with a lot of significant historic work completed. There are 2 access shafts that were sunk in the early 1900s. This mine was primarily explored underground, 12 underground levels with thousands of meters of underground drifts. So the mine was explored on 12 levels underground. Not much surface drilling, only 7,000 meters of surface drilling was completed by Exxon Minerals during the 7 years that they were underground. Just for comparison, we just completed 7,000 meters in the last few months with assays outstanding. Some metallurgical testing, but our estimate is that to recreate all this work in today's dollars, you're probably looking at close to $75 million. Obviously, what we're doing now is a bit different. We're exploring from surface instead of drilling underground. So we had 3 sets of level plans from the 1920s, the 1950s, and the 1980s. We spent a few months digitizing all that. There was assays every 4 feet underground drilling, the surface drilling. We digitized that, modeled it ourselves in Leapfrog, created our own wireframe, which you can see here. And this was really the guide to our initial drilling. Our estimate was between 6 and 7 million tons, which is very similar to what Exxon was reporting in their historic work. And taking this model, we then started doing initial drilling. The first 6 or 7 holes were in the shallowest part of the deposit, really to calibrate our own drilling, calibrate our model, make sure that the level plans that we'd use all lined up. And it took a few holes to work that out, work out the deviation on the drill. But Exxon had reported that the lenses in the deposit, there's 18 vertically stacked lenses, would range in thickness from 5 meters up to 25 meters. And this is a tightly isoclinally folded deposit. And if you can locate the fold hinges, Exxon was reporting much better grades, but also much better widths in those folds. So the focus of our drilling has been to locate these fold hinges. And you can see on hole 13 in the south zone, we're pretty confident we've located one of those now. We hit 43 meters of almost 4% copper equivalent. And as you get closer to that fold nose, we hit 15 meters of 6.7% equivalent. In the north zone, we're looking for a similar hinge. And one of our last holes drilled, KM 2012, you can see we had 26 meters of 0.9% right next to almost 5 meters of 5% equivalent, which is lower grade, but we see that as an indication that we're getting closer to a similar type of hinge in the north zone. And these hinges plunge vertically. The deposit starts at a depth of about 120 meters, and we think it goes down to at least a kilometer deep. So plenty of depth extension to test this deposit to try expand these hinges both up dip and down dip. And then in holes 9 and 10, you can see these are just at the very southern edge of Exxon's historic resource. We intersected a different type of mineralization, very rich in zinc and gold and very little copper. And that's typical in these VMS deposits. You can get a copper gold zonation near the heat source where they were originally deposited. And as you move further out, you get into more zinc gold rich. At the time Exxon was exploring here in the 70s, they had no interest in the zinc, and many times they reported massive sphalerite encountered but not assayed. But as you can see, when we're assaying that, the primary value of these lenses is actually in gold, not in zinc. So in hole 9, which was at a depth of about 450 meters, we hit 6 meters of 8 grams gold equivalent. We then moved the drill up about 80 meters, and 10C, we've hit 6.8 meters of 7 grams gold equivalent. And I can show you this in our model, but we're seeing good vertical continuity up dip and down dip in this gold lens, and we've just done a step out to the south to extend the strike of this gold rich zone. That's hole 15, which is currently at the lab being assayed. And this gives you just some of the idea of what we're hitting. You can see here, hole 13, this 43 meters on the hinge. You know, we've located the hinge now, and within that there was 15 meters of almost 7% copper equivalent. The goal now will be to start tracing this hinge up dip and also down at depth. And this is the hole I mentioned in the north zone. We've hit a wider intersection here. We think we're close to the hinge here now, and when we get started, you know, that'll be a potential, will be to locate the same hinge here and also expand that, follow that up dip and down dip. This is just a downhole view of the same thing. You can see here, this is the edge of the historic resource where we get into the gold zinc that Exxon wasn't interested in. Put the first hole here, hit a 6 meter thick zone, moved it up, same thing. 10C, so we've defined it over about 150 meters now. And then hole 15 at the lab is 15 meters further up. We're seeing similar mineralization. We'll see if the grades match up when the assays come back in a few weeks. And obviously this could continue up dip well, could continue closer to surface and significantly further down at depth too. And this is just an animation I'll run through, which gives a very good overview of the K mine. So the K mine was formed as a VMS, volcanogenic massive sulfide. It was a seafloor deposit, so originally formed flat in the seafloor and then folded up vertically, so isoclinally folded into this shape. But to keep in mind, it was folded up and then flipped vertically on its side, so the hinges of the folds are actually running up and down at depth. These are the first 6 calibration holes we did where we started to basically confirm our level plan. And we were hitting grades similar to what Exxon reported, 5 to 10 meters. In some cases, we're getting better grades, up to 10 or 15% copper equivalent. And then we switched over to drilling, trying to find these hinge zones where Exxon had reported much wider widths here in the Southlands at between 300 and 500 meters. And that took a few holes, but hole 13, we got into that hinge. And we also started seeing this gold zinc lens that Exxon reported hitting zinc, a rich zinc massive sphalerite, but they didn't assay it. This is just the typical copper ore we're seeing. It's chalcopyrite, which is the same mineralization in all the mines in the region, responds very well to flotation. And then 10C, this is the more typical zinc ore, sphalerite with gold. There are a few mines in the region that operated primarily as gold zinc mines. There's one about 30 kilometers north of us, which ran for almost 100 years. But the expansion potential now is, I'm just going to pause here for a second, is to find similar lenses. So you can see the K lens here is at the contact of this green mafic schist and this yellow felsic schist. Well, and we expect to find additional deposits on that contact. You can see the folds here running at surface, so that the hinges of these folds extend down into the page at depth. We would expect to see, if we're going to find more deposits like K, because it was all the same seafloor, we'd expect them at this contact. Last year, we completed a helicopter VTEM survey, electromagnetic survey, and we're seeing a large conductor right at the contact where you'd expect it. It's about a 40-meter thick conductor, starts about 120 meters deep, never been drilled. And then within another 500 meters away, so it's about a kilometer span, there's a second conductor also on that contact. That's about an 70 meter thick conductor. Starts very close to surface, never been drilled. We're permitting both those conductors now, planning to drill those later this year. And just last month, we completed a soil survey on top of those conductors. So we have the contact, we have EM conductors, and we just completed a soil survey that's showing a gold copper anomaly above the K mine, which is what you'd expect. But on those conductors, we're seeing very similar copper gold anomaly right above the conductor. And on the western target, same thing. And we're using this to target our drill plan. So you can see these are the proposed pads on the western zone, and then we'll have the same for the central zone. Basically trying to find another K deposit. And this is all within a 1 kilometer, 1 kilometer of the K mine, but untouched over the last 40 years. And now, interestingly, the old timers had a good idea that there was something there, because above the central target, right where we're looking, there's an adit that goes in. There's some copper mineralization at surface, and the same at the western target. There's actually 4 adits and 1 shaft going down where they were trying to locate the same thing. We think that work was probably done in the 50s, but no drilling into either of these targets. And this just shows the folding model, how this really started out as a flat sea floor. So probably all came from the same source. We're looking for the extension of K. You'd expect to see other deposits, and that's very typical of the deposits in the region. There's 60 mines around us, and many of them are related to each other geographically. So that's the K overview here, just to give you a sense of the setting we're in. We're in Yavapai County, which is a historic mining district. We have very good relations with the local community and also the politicians in the region. In February, we invited the president of the state senate, Karen Fan, to visit the property. And it turns out that Yavapai County is her district. We also had the 2 congressional representatives for the district come visit the property. One of whom is the also the chair of the Arizona Mining Caucus. And the region is, fairly well. This was before COVID. The region was fairly economically depressed. So they're looking for new jobs, and we're they're hopeful that we can find an economic mine to build at K. 15 just gives you a sense of the Sugarloaf deposit. This is our secondary project. We also own 100% of this, 2 hours directly west of Phoenix on a land package of 4 by 6 kilometers. The historic resource itself here in purple lies on a strike of 1 kilometer by a width of 300 meters. It's defined down to only 70 meters. So the 1.5 million ounces at 0.5 is from surface down to 70 meters. And because it's relatively wide, it's flat lying, there's no dip, we think good potential for a low strip ratio. And the keys to these deposits are to have a low strip and good metallurgical recoveries. So there was some initial metallurgy done by Kinross and Agnico in 2009 and 2011. They did some bottle roll testing, and we're getting cyanide leach recoveries of 63 to 75% in the gold oxides, which is typical of currently producing mines that are economic at these prices. So the goal, I think there's two potential expansion targets here. One is to extend this on strike. We've got an EM, we've got an IP and a magnetic anomaly, coincident anomalies that run from the deposit about 1 kilometer to the southeast on strike, and also 1 kilometer to the northwest, also never been tested. And we have just, as Paul mentioned, we've just completed 1,700 meters of drilling here, 4 holes. The first 2 holes, this is hole 1 and hole 2, were really done to confirm some infill drilling on the historic resource. The average spacing on the resource is about 150 meters. It looks like it needs to be reduced to 50 or 75. As you can see, the first hole we put in shows very similar results to the historic work. 99 meters of 0.6 from surface. Within that, there's a higher grade zone of 30 meters at 0.9. The historic estimate itself is down to only 70 meters, and this hole was mineralized for twice that depth. Obviously, the question will be how much of that is leachable. The remaining 3 holes that we drilled were to test, well, hole 2 is also going to be for metallurgy. These 2 holes are going to Kappes-Cassidy for column testing and bottle roll testing. We should have those results in a few weeks for the bottle roll tests, maybe a few months for the column tests. And then we actually ended up doing 3 deeper holes because hole 2 looked, it looked interesting enough to continue it down at depth. This is an IP target that was defined in 2011 from a Titan 24 survey. It starts at about 300 meters down, goes down to probably at least 500. We see this as a potential feeder zone. So we've drilled these holes to try and locate higher grade material at depth, and those holes are currently at the lab. We expect to have those results in probably about a month. Yeah, so to summarize, we own 100% of both projects. Focus is on the K mine. We've completed 20 holes. We have 4 holes at the lab awaiting assay. Sugarloaf, 1.5 million ounce historic resource, heap leach open pit with good expansion potential. We have 3 holes currently at the lab, and those are really testing for the higher grade feeder zones at depth, and those will also be sent for metallurgical testing. Paul mentioned we have both programs on hold. We just completed them about 10 days ago. Once we have the data back, we'll we'll evaluate the phase 2 programs for each project. So maybe we can open it to any questions now.
Thank you. That was really very interesting. So we will call on some of our panelists to start with. Adam Graff, do you have any questions today? You need to unmute yourself.
All right.
There you go.
Can you hear me?
Yeah, I can hear you.
Ah, great, great. What's the what do you guys think the economics of Sugarloaf Peak are? Given the given the grade there, is that a project that looks like it works at you need $1,600 or $1,800 gold, or what's your gut telling you there?
Well, we've compared it to a number of other projects. So if you look at there are a few other heap leach projects around the world in operation now that are between 0.5 and 1 gram. There's even one, if you look at El Castillo, that Argonaut has is 0.3 grams. And the lower the strip ratio and the higher recoveries, the lower you can take that grade down. We think for this 0.5 gram deposit, you need a sub 2-to-1 strip ratio, and you need recoveries above 65 or 70%. Initial indications for that are good from what we've seen, but that's what we're testing now with our metallurgical program. And it will take some infill drilling to define the final strip ratio, but the fact that it starts at surface, 300 meters wide, there's no dip to it, it's tabular. We think good potential for a low strip. And in terms of metal price, these projects are running at all-in costs of probably $600 to $1,200 an ounce. The ones that are making money. So we probably anything above $1,500. These are viable deposits.
How much more? What's the kind of program that you envision to get Sugarloaf Peak to sufficient drill density to get to really be able to get a good inferred resource and put together a PEA?
Well, there's 7,000 meters of historic drilling on the project now. We have quite a lot of that core in storage at the site, so we could twin some holes. I would estimate it take another 30,000 to 40,000 meters, but the goal of that would be to prove up the 1.5 million, but also to increase it significantly. So the cost of that, because we can do RC drilling at the K mine, which is substantially cheaper than core drilling, we can probably do that for $100 a meter. So to really drill it out and expand it, it's probably about 30 to 40,000 meters, which would cost $3 to $4 million. And then obviously,
how much do you guys have sitting in the bank?
We have just over 5 million now that we've completed the 2 drill programs, and we have about $3.5 million of in the money warrants at 50 cents, which were from the RTO raise about a year ago. But our focus now is not Sugarloaf. We're waiting to see what the results come out of it, and obviously if we hit some high grade at depth, that would change the way we look at it too. The focus is the K mine, and we've always viewed the Sugarloaf project as likely a spin out, so that Arizona Metals shareholders get a share or a fraction of a share of a spinco, and we drill Sugarloaf separately because we're seeing there's a very different audience for high grade copper gold VMS versus heap leach gold oxide deposits in terms of investors and funds too.
All right, thank you.
Thank you, Adam. Marshall Barrel, are you with us today? Do you have any questions?
I am, yes. Thank you, and I do. Thank you very much. On K, I noticed in one of your charts you talk about shafts. Are those shafts currently operational, or do you need to do work on them? And what do you anticipate? This would be underground. K would be underground, or
Yes,
open?
K would be an underground mine. We think it would be a 2,000 to 3,000 ton per day operation. It would have a relatively small footprint, under 500 acres, to have a concentration plant there and all the mine workings. But in terms of the shafts, there's 4 shafts. There's the 2 main access shafts, which are about 3 by 3 meters wide each. They each go down 450 meters. And then there's 2 ventilation shafts about 300 meters away from those. But those shafts were sunk in stages starting in the early 1900s. The support for those shafts right now is just timbers, and we've actually drilled through some of those timbers. But the rock's pretty competent. It's held up very well. The shafts are flooded right now. But they have been dewatered and used 3 times in the last 100 years. So they were allowed to flood in 1907, reopened in the 20s, dewatered, and people went back down to explore. Flooded again, reopened in the 50s. Some exploration was done. Flooded again, and then Exxon dewatered them in the 70s. Did some exploration. So we think the shafts are probably in decent shape. They've held up well, but our view is this deposit is probably more amenable, and the economics would be better for a ramp. A lot of the tons are within 400 meters of surface, so we think rather than using those old shafts, it's probably more economic to put a new ramp down and at least get what's within the 400 meters of surface that way.
Okay. And then you're waiting for the rest of the assay results on K, and then what do you anticipate would be the time frame for deciding on what the next steps are?
Well, we just completed last week a downhole EM survey. So we did downhole surveys on 7 of the holes that are completed at K. We should have the final results of that survey in a few weeks, and that'll basically show where we've already hit sulfides. It should show the extensions of those sulfides at depth at K. And as I think I mentioned, K is defined over 150 meters of strike, but we've traced that for 4 times at surface. So there's 600 meters of strike. So there's really only a quarter of the strike is being tested. And that EM survey should show us where to drill on strike to increase the size on strike, but also in the hanging wall and the footwall. So we should have that in about a month, and we'll have the final drill holes in about 3 weeks to a month. We'll put all that together to plan the phase 2 drilling at K, but that's also going to include our targeting for the. So I just want to show you here for these central and western conductors. So we plan to do. We're planning to do probably about six holes at each of the central and western conductors to try find the same type of deposit that we have at K. And that would probably start later this year.
And then you have an estimate about when you might have a 43-101 resource estimate available?
We at the K mine we'll have a better idea once we get these holes back. The continuity is looking good. It's gonna take more drilling, but we don't, our goal is not just to prove up the 6 million that Exxon showed. We want to get K to at least 10 million itself, so it's standalone, and hopefully find something similar at both the central and western conductors. So I think it's going to be a bit of a moving target on how long it takes to get a resource estimate until we have the results of the current drilling back.
Okay, fine, thank you. wasn't familiar with the company, and this is very, very helpful. Thank you very much.
No, thank you.
Thank you, Mark. Michael Potter, do you have any questions today? You have to unmute yourself.
Yes, okay. Yes, I do. Can you go through again what are the dimensions of the EM conductors that you've identified? The central and western conductors, and how they compare with the actual size of K itself.
Okay, so let me try to show you here. So here's K. K starts at 120 meters below surface. These two lenses, the north and the south. It's defined down to about 600, but Exxon actually drilled a hole down to 1,000 meters. So K probably goes down at least 1,000 meters at depth. 150 meters strike, but we think we've traced that strike for 600 meters. So there's significant potential to increase K on strike, both north and south. And we're also, because we're drilling through the deposit, we're getting a range in thickness from 5 to 35 meters, but we're also passing through the hanging wall and through the footwall, which Exxon didn't do the way they were exploring because they were drifting underground. And then to compare the central conductor, this anomaly is about 40 meters thick. It's been traced for 300 meters at surface, or almost 400 meters, and it goes down 300 meters too. But that depth is just the limit of the helicopter survey, really, because these are vertically plunging folds. We expect it's going to have a similar depth potential as K, so this could go down 1 kilometer too. And then the western conductor is about 70 meters thick, also 400 meters on strike, and 1 kilometer, potentially a kilometer deep too. So we think there could be two targets very similar to K.
Okay, and what's the depth what depth do the central and western conductors start from the surface, below the surface?
So the central conductor starts at roughly 120 meters, which is the same depth that K starts at. The western conductor ranges from about 6 meters. You can see it's kind of angled here, 6 meters to 40 meters. And there are some, there's some mineralization expressed at surface, which you see in these soil samples. And, obviously the past operators were aware of it because they were putting in adits on both the central and the western targets to try find what we're looking for.
Okay. It looks pretty interesting and consistent. Will you be doing your first drilling? Will you be drilling the western conductor before the central conductor, as it seems to be come up to shallower depth?
No, well, just for the logistics, it's actually easier for our permitting and our road plan. We're extending a road, so K drill road comes through here. We're extending this road first past the central conductor, so we'll have the road in position to drill the central conductor first, and then we can be drilling here while we're continuing the road work to the western conductor. So the plan would be the central first, just because that's the road goes past first, and then continue the road and then drill the western conductor right after.
Okay, fine. Thanks a lot. It sounds as though you're going to have an interesting time when you drill those two conductors.
Yeah, we're looking forward to it. So far, we're getting all the signs we're looking for: the soil anomaly, the EM anomaly, the structure, and of course the adits from the historic work.
Okay, that's great. Cheers.
Thank you.
Victor Zhao, do you have questions today?
Oh, yeah, yes. Hello?
Yes, we can hear you.
Okay. You are mostly focused on key project. But maybe Sugar Loaf, the gold project could develop faster. if you take more efforts to do that? What's your idea? Yeah,
Yes,
for the development. Yeah.
yes, potentially it would be, it's quicker drilling at Sugarloaf because it's shallower and we can do RC drilling. So we're really waiting to see the results of these 3 holes at the lab. And obviously it would be a very different development plan for Sugarloaf if we find some high grade here at depth.
So here, this map, the shallow part is included in the open pit, right?
Yeah, the historic resource is defined only the 1.5 million historic ounces is down to only 70 meters.
Yes. Okay.
But this hole we drilled here went down to it's 140 down hole. It's probably about 120 meters vertically. But even at the end of the hole, this is down at 240. It's mineralized. So there's a lot of disseminated gold here, and we think there could be a high grade source for all that gold. This is right on the Goodman Fault. There's a big fault system here that's probably bringing all this gold to surface.
Yeah. So you don't have a plan of timeline for the development.
Well, to drill out Sugarloaf, if we wanted to drill a resource there, say we did 30,000 meters, we can drill 120 meters a day, and so it's just a question of how many drills. But you could do a lot of drilling in Sugarloaf. You could do 30,000 meters in a few months here if you had 2 drills.
Okay. Thank you.
You're welcome.
I brought up a question, which was when you were initially discussing the K mine, you touched briefly on permits and how you didn't seem to have the usual permitting problems that you might run into next to a national park. Could you expand on that a little?
Yeah. So our claims here are this small square is the small rectangle here is the private land. So the historic resource is on patented or private land, 70 acres. We've also acquired and staked another 1,300 acres next to it. That is Bureau of Land Management federal mining claims. And there's a very straightforward permitting system to get drill permits, but also to develop mines on those types of claims. But once you're in the national forest, it becomes much more complicated and much slower. So there's 60 mines in this region, but many of these old mines have great geology. There's probably lots more mineralization left to find in them. But because they're in national forest, it makes it very hard, very expensive, and very slow to get permits to develop them. So they're no one's spending time in them. We're just lucky that K is one of the few that was left outside of these boundaries, and also it hasn't been worked on.
You don't anticipate permitting problems on your 1,300 acres?
No, not based on what we've seen to date. We're just on standard federal mining claims.
Right. The other question I had was, there's a lot of copper and a lot of gold. Are you confronted with having to decide whether you're a copper mine or a gold mine?
Well, the K mine, we'd expect to produce a copper concentrate, and then we'll see what the zinc gold lends, if there could be a separate zinc concentrate. We'll have to do some metallurgy to start working that out. But that's one of the reasons that we're talking about potentially spinning out the Sugarloaf project, depending on the results, because that's gold only and it has a different audience.
Right.
Yeah.
Okay, thank you. Scott?
Just to follow up, I'm sorry, just to follow up on that, Exxon, when they did their work underground, whenever they encountered the zinc mineralization, they didn't assay it. They just passed by or didn't pursue it. We think there's a good opportunity to increase the tonnage of this valerite mineralization that Exxon didn't pursue. So I don't think that's been mentioned, but and that's what we're finding on the outside of this southern extension of that south zone. We've encountered high grade zinc gold mineralization So the tonnage that they were reporting would be mostly the chalcopyrite, but we think there's, I'll let Mark, expand on this, but a good opportunity to increase the high grade zinc gold.
Yeah, that's this image here where you can see whole mine links up to 10, which links up to 10C, and then 15 is up here, actually up here about 50 meters above. So that's where we think good potential to expand this gold zinc zone up dip, but also down dip, and then also into the page, expanding it to the south here. So going to the right here, we think the zinc mineralization could continue out this way. And you can see 15 was a bit of a step out that direction. We think the next step is to start stepping out even further south to trace that zinc gold lens.
Oh, okay, great. Thank you.
And hopefully that downhole EM that we did, as Mark mentioned, will help delineate those targets even even more specifically.
Yeah, we'll have EM results for this 15, 10C, and 10, hopefully showing us where to go out in this direction.
Okay, thank you. Scott, do we have any questions that have been sent in?
Yes, we do. We have a few. So I'll read those now. A couple of them have already been answered. And maybe this one has with your permitting question, but it was a little more specific, so I wanted to ask it. You said that you are permitting for the conductor zones. How long does that permitting take, and do you see any delays in getting those permits?
So the first one we did for the K mine took about 4 weeks, maybe 5 weeks to get the final permit. For the western and central conductors, we're expecting a similar timeline. We're waiting for completion of our soil survey before we do the final western targets. But I think we're expecting the central and western permits in the fall, and it's then going to take, I would say, probably a month or two to rebuild the roads out there and put in the new drill pads. But I think I mentioned we would start with the central conductor, and then while we're working there, we can be continuing the road to the west to start building the western drill pads.
Thank you. The next question, why did Exxon stop exploring on the K project?
Well, Exxon Minerals was the subsidiary of Exxon Oil, and they set up their minerals division in the early 70s. They had exploration projects all over the southwest US, but they were also running a uranium mine in Wyoming. It was a heap leach open pit uranium mine, and they had another VMS project, a large project in Wisconsin, where they spent a lot of money, a 60 million ton deposit. They spent $700 million in today's money, and then the EPA basically shut them down in 1981. And they had the same problems at the uranium mine in 1982, and that's right when the oil price took off, and all the oil companies that had mineral subsidiaries shut everything down. So 1982, they shut down all their mineral exploration and just walked away. They quit claim everything, and that's part of the reason why there's no royalties on any of the K claims, because they walked away.
Okay, great, thank you. Next question is, how long are you able to drill with the cash you have on hand, and is there a financing in the near future?
It's going to depend on our final phase 2 program for K. The $5 million we have now, not including the warrants in the money, which we're starting to see some of that come in. The $5 million we have now can fund K till the end of the year, depending on the size of program, but definitely to test the western and central conductors and some step out holes at the on strike at K. And then Sugarloaf, the money we have now, we haven't budgeted anything towards Sugarloaf. We're going to wait to see what the results are at Sugarloaf and see if that's worth spinning out to drill that separately.
And on that note, how far is Sugarloaf from K?
K is an hour directly north of Phoenix, up the I. Which one is it? Well, it's straight up the highway that goes to Prescott, an hour north, and then Sugarloaf is 2 hours directly west of Phoenix towards Quartzsite.
Okay, thank you.
3 hours apart.
Is there any possibility to monetize Sugarloaf by selling the asset and concentrating on K Mine?
Yes, I think there is. So one way would be the spin-out I mentioned. But I suppose there are other possibilities too.
Thank you. This one just came in. Do the holes at depth at Sugarloaf depict any specific style of mineralization? Was there anything visible in the core that can be mentioned, increased pyrite or other?
Yeah, so this, there's some debate over the years in the historic reports we've looked at of what type of deposit Sugarloaf is. Is it epithermal? Is it orogenic? And potentially it could even be quartz carbonate veins. So we are seeing some elevated pyrite and elevated quartz at depth. So this is hole 1. Not really going into this anomaly. We stopped it at 240 meters. Still hitting some mineralization at 240. But when we put hole 2, that was also planned to be only 150 meters, but we were seeing, very, very good quartz, so silicification and pyrite at 150 meters, and that continued down to 370 meters deep. That's why we took this one so much deeper than originally planned. And same in 3 and 4. We're seeing good quartz, sericitic alteration, some good carbonate alteration. But because this has never been tested at this depth in this area, we have nothing to compare it to on the historic drill log. So we're really waiting on the assays to see what the gold content is here.
Thank you. And staying on this slide for a minute, the question is, on the Sugarloaf model, you have the anomaly, large pink shape with purple nucleus. Can you explain more about what that is and how it was defined?
This is from this is an IP. This is an IP and resistivity anomaly. This was completed by the previous company that had an option on this property in 2011 named Choice Gold. They did a Titan 24 survey and defined this IP target. So it's induced polarization shows conductivity, which is, we think, likely driven by this pyrite, and that's what we're seeing in the core. But this is there's a large fault system here. We think that the gold in the disseminated deposit is gold hosted with pyrite, which gives you the IP high, and then with silica, so you get a mag low. But there's an IP and a resistivity contour here that is showing conductor, which we think is pyrite, and we know the pyrite at surface is hosted with gold, so we're hoping that the pyrite here at depth is associated with gold too, and that's what's at the lab right now. And we think that could potentially be, a higher grade feeder zone.
Okay, great. This one just came in as well. At depth, how are the geologists seeing the style of mineralization, low or high sulfidation, other? Could be a home run if it runs, as it would be a dramatic shift and a discovery. So how are the geologists seeing the style of mineralization, low or high sulfidation?
We're actually in some of the holes in 3 and 4, so we're not sure. There was some thoughts originally: is it high sulfidation, is it low sulfidation? But we're actually seeing some quartz carbonate veining at depth here, so similar to what you would see in the in the Cadillac break or Abitibi. Carbonate sericite alteration with lots of silica, lots of pyrite, you know, and at depths that haven't been tested. So we think there's that potential, and that's what's at the lab right now.
Great. And a follow-up just came into that as you're answering. Is that similar to Hemlo style?
Yeah, this is similar to the mines, yeah, the mines of Cadillac break, Timmins, quartz carbonate style deposits. At least what we're seeing in the core, but yeah, still, you know, it's the assays. The assays will decide in a few weeks.
Great. Well, that is actually all the questions we have from the audience, Doug.
Well, that's great then. Thank you very much, gentlemen. This is really interesting. Are there any comments you'd like to make finally in closing? What's the one thing you want us to remember?
Well, I think the key is that the K mine, we're starting with 6 million tons, but we have these 2 large conductors to the west that will start drilling later this year. Those both have the potential to be another K deposit on its own. So we see significant expansion potential there. And then Sugarloaf, it's 1.5 million ounces. We think potential to double it on strike and at depth. But we're really looking forward to getting these depth targets back, because, you know, we think there's potential for some higher grade deeper down.
All right. Well, thank you.
Thank you very much. And thank you all for attending.
Thank you.
Thank you. Good night.
Thank you very much.